see who has the fan club in here. Namir obviously got the warmest welcome, but thank you very much for joining us. I'm very excited about this, this panel. You know, when we come to events like this, conferences, it's very easy to get excited about the innovation and the possibility of what tomorrow may bring for our industry. But the entire world turns on the financial systems that we are building. And billions of people depend on them to work continuously, even when facing disruption. You know, later this year in this very city, leaders from around the world are going to come and they're going to talk about how we can mitigate climate change. You know, there's talks about biodiversity and social and economic equality. And when we look at those systems, all of those, the underpinnings of those are based on the financial systems, technologies, and ideas that we're creating here that fund and enhance and secure that. And so this panel today is going to talk a little bit about why it's so important to build a resilient and sustainable financial systems, especially in an age of disruption. So without any further ado, we'll go ahead and get started with that. When we talk about sustainability, a lot of times we're seeing, you know, very large financial institutions that are driving a lot of that sustainable activity. But the question is, how can FinTech accelerate, or will FinTech accelerate those sustainable activities, not just at the large financial institutions, but across a broader segment? And Adam, we'll go ahead and start with you if you don't mind answering that.
Thanks, Ben. And I think first of all, I think this is an opportunity for the whole industry to move forward together. And I think at Google, we've seen a tremendous demand and request for partnership from large financial institutions, and it's exciting to see the progress we've made there. I think just two recent examples. We partnered with HSBC last year on a new new climate infrastructure, bringing artificial intelligence to run innumerable what-if scenarios to predict climate risk, and working on similarly exciting opportunities in Latin America and India as well. I think the exciting opportunity with FinTech is in all of our pockets, and it's playing a growing role of importance in the global economy. And I think what FinTechs will really do is drive kind of consumer adoption, and we're starting to see that. They created current accounts where you can track your carbon offsetting and footprints, making it easier to invest in ESG funds. So I think ultimately, as with all things climate, it's not enough to sit here and say we need to do more. For it to have kind of scaled impact, it needs to be better, it needs to be faster than the alternatives, and hopefully that's what FinTech can add to the overall ecosystem.
That's great. And Namir, you know, you represent a large, I guess, organization of FinTech here in the MENA region. How would you answer that question? How is FinTech accelerating those efforts across the board?
So significantly, right? So first of all, thank you everyone for being here, and those who are here, that shows that you're looking into the future and you care about the future. Which is really important. And what we have seen so far, and just basically concurring to Adam's thoughts over here, that first of all, carbon emissions, the larger problem that we're looking into, what is that larger problem? We're looking at 51 billion tons of carbon emissions, right? And 51 billion tons of carbon emissions is a product of consumption, and consumption is a product typically of spending. Therefore, it actually hits every single payment or every single digital transaction that we are engaged in, right? So today, if you look into it, FinTech has democratized financial services. Now, as financial services is democratizing, we're having you know, financial services into every single pockets while it's there, which means today we have that ability, which we did not have before, to be able to reach out to consumers who would want to change their consumer behavior. And how we have seen this, and now I'll take the, I'll basically give an example of how I've seen the trends changed. I started my journey as well as a founder 1.5 years ago, where things were a lot different, where you would see a lot of resistance from financial institutions, including FinTechs as well. But thankfully, due to the awareness that we have seen because of COP28 and the global dynamics, how they have created this strong awareness on the importance of taking care of what's going to be ahead of us in the next 24 months onwards, is that every FinTech is going to be a climate FinTech. $2.9 billion were invested into this specific industry in the past 8 months. Simultaneously, today, we've secured multiple partnerships with leading operators, with leading banks. Why? Because today there is more understanding and openness between the financial institutions in this region. So initially, it was a bit difficult, but today it's a lot more evident, and that has a lot to do with the consumer push, the consumer demand, the consumer awareness, and at the same time, the upcoming regulations, which is going to make it a lot more, I would say, accelerated in terms of adoption from both consumer and institutional side.
Thank you. And so leaning into that a little bit deeper on the consumer side, Alex, obviously you have a foot in both worlds, right? With Standard Chartered, your affiliation with Standard Chartered, and then also on the venture side, both building and investing in that. And obviously FinTech plays, the key role for that. How do you see that evolving to affect the consumer, keeping in mind those efforts towards sustainability and resilience within the banking systems?
And, thanks, and hi everyone. First, it's great to be here in Dubai. You're absolutely right. Foot in both worlds, and in fact, we think that is the model. And I'll pick up on a point you made earlier about the initial. In fact, maybe I just made the initial reluctance of large organizations, be it corporates or financial institutions, to sort of get on with the program. We set out to rewire the DNA in banking and financial services, which really means reconciling banking and financial services with the expectations from society. And that means serving clients, consumers, and corporates the way they need to be served, and doing this in a relevant way. And in order to do this, financial institutions have to be around. They have to not fail, meaning sound financials, sound balance sheets, sound technology, sort of sound data protection, all these things. That's non-negotiable. But they also have to be relevant in terms of addressing the themes that are relevant to society, be it lifestyle, digital banking, digital assets, which are here to stay, we think, provided you build a robust infrastructure for it, SMEs, world trade, supply chains, etc. I would argue that 95%, 99%, everything I've just described has something to do with sustainability, financial inclusion, and it's really at the heart of of what we do. It has to do with operating sustainably. That's the way we conduct business. That's the resilience of our platforms. That's just operating sustainably. But it also has to do with sustainability and inclusion at the core of the business model, and coming up with startups and business models that are doing this. And back to your point, foot in both worlds. This happens in large organizations, in large financial institutions, because that's non-negotiable. It's in fact existential for future relevance. But it also happens outside, building startups, engaging with startups, with fintechs, with new technology, new ways of doing things, new business models, which is almost more important than the technology itself. And the amalgamation of the two things, where the adjacency happens, is really where lots of value gets created and where we move the needle in terms of advancing a sustainable agenda for us all.
So you touched on something a second ago, and you said that financial institutions and corporates as well, everyone needs to come follow where those themes are going, and looking at the themes that consumers are concerned about. I think we've seen a lot of statistics about how many consumers are looking for sustainable products to buy, looking for sustainable brands, and the same thing with the financial services. But another key piece to that gets a lot of focus, and I personally think it needs a lot more focus, is this idea of inclusion and inclusivity. And you mentioned that as well. But Amnah, could you talk a little bit about inclusion and maybe some real-world examples where you're seeing this being played out in a manner that's sincere, right? Because I think a lot of times these social issues, when we look at ESG, the social issues get kind of lip service, and a lot of the focus is on E, which, we need to focus on that. But maybe could you give us some examples in real world of where they're taking inclusion seriously?
Thanks, Ben, and hello, everyone. So at Mastercard, of course, inclusion is at the heart of whatever we do. But I also see it in my clients across multiple industries, be it retail, telco, hotels, airlines, fintechs. It's more and more top of mind for everyone. Maybe two small examples that I can give is, in Africa, 625 million people do not have access to electricity. And this means they have to rely on methods like candles, kerosene oil, which is neither good from a safety standpoint for them, nor it's sustainable for the environment. So our labs in Kenya came up with a solution which is relying on solar energy, but solar energy is expensive for Africa because it requires an upfront investment. So the option that we give to consumer is pay-as-you-go electricity through QR payments, which means if I'm a consumer and only need electricity for 4 hours, I can pay that day for 4 hours only. So you're contributing to the environment, plus you're making it safe for the consumers, right? But at the same time, you're including a segment of the society that otherwise would have been left out. And this is thanks to technology and thanks to having a mission together with those technology capabilities. Another great example is a lot of food delivery and ride-hailing companies have riders and drivers. You see it over here in this part of the world. You see it in every part of the world. And they need immediate access to earnings. And our partnership with Uber provides exactly that. The drivers and the riders, they get immediate access to the earnings through virtual digital solutions, and then provided remittances on that solution, which means they can send money back home, as most of them are immigrant workers. So these are just two small examples how you can be more inclusive when you're thinking about financial services and technology, because today, technology can make that happen.
Yeah, that's a great point. And you know, I think I had heard that carbon is the currency of the transition, the green transition, but I think that financial services, and as we advance, especially with FinTech, it's going to open that up to be more inclusive and not just focused on you know, the banked and the currently technologically plugged in, but it'll expand that. Adam, maybe you could go into that a little bit more as well and talk about some real world examples of inclusivity and potentially how FinTech is helping to drive that.
Yeah, for sure. And I think, you know, one of the key principles at Google is we really try and build products for everybody. And I'm sure one of the reasons that we're all excited about financial services is it has the opportunity to be a rising tide for everybody. And I think you don't have to look very far to see some great real-world examples, and we've heard a few today. I think one that stands out is we partnered with a minority-owned bank in the US last year called Better Bank, SME-focused bank who had the pure goal of making sure that underrepresented business owners and founders could get access to capital, start their businesses, get fair rates. And we're seeing that the business model works as well. We're not just seeing that it's being done because it's a good thing to do. It actually is good business as well. A little bit closer to home in a slightly different topic. We launched a tool called the Environmental Insights Explorer a few years ago, and it allows kind of cities to have access to tree canopy coverage, vehicle emissions, building emissions. Lots of major cities have kind of bold climate and sustainability strategies, but it has historically been a lot harder for smaller cities to have the same access to data. So with the Environmental Insights Explorer, we have democratized access to climate data for all cities and enabled them to take action on which areas are going to be best for solar panels, which areas do they need to pay special attention to with traffic flows, building emissions, and similar things like that. So I think it's sometimes useful to look at this from a bit more of a holistic approach as well.
Yeah, that's understandable, and you know, a lot of times when you have companies that are backing projects like this, it is, like you said, just because it feels good, but it needs to be financially sustainable as well, and building systems that allow for that, I think is really important. But then again, there's also the risk side to not being included in that, and I think in a previous panel, they were talking about that you know, there's an opportunity here as well, not just the negative consequences of regulatory issues that are doing it, that are driving that, but maybe what are some of the risks of ignoring the idea of inclusion? You know, we talked about sustainability and we understand that, but Namir, maybe you can speak to this. What do you think are some of the risks of ignoring exclusion or inclusion as a core component of really any business model, but specifically in the financial services sector?
So first of all, it's a great question because the initial thing that, you know, happened was that climate and sustainability was linked to CSR. So that is not the case anymore. It's one of the biggest revenue drivers of the future, right? It's an investment. Just giving you an example, the carbon credit market is a $30 billion market by 2030. And in just 7 years, that is a significant, I would say, upside that you're looking at in the next 7 years. One. Two is that this is going to be a turning point again. As we had the same evolution that whether you basically embed climate or sustainable, whether you basically embed digital into your business models, you will have a Kodak moment, right? This is I would say Kodak moment 2.0, where if you do not basically embed climate or sustainable action into your businesses, you will have another Kodak moment, right? And that is why you would see. So as you mentioned, there's a SME that is focused, SME bank, right? Simultaneously, you have challenger banks with a new niche, which is sustainability focused or climate action focused, neobanks that are challenging the neobanks. And neobanks were challenging the existing banking infrastructure. So you see there's a complete new stream that is out there. So you would not see, even if $2.9 billion were invested, they were invested by understanding what the future holds. You have a complete value chain over here. I mean, when you're doing verification and you're doing assessment of the projects, the reason why you're doing this is because you see the demand coming in from players like us who need those projects to be able to provide to our businesses, to be able to provide that impact. It's a complete chain that needs to be embedded. Banks today, be that Barclays, be that many of the banks in the UK or in Australia and Far East, all the banks have actually launched a green product. One, two. Now that green product is not that you will buy something and then we will give you a Tesla. No, that a green product is based on real facts and figures and real returns that are linked to potentially investment gains, but more focused towards investing into projects that are supporting the overall 17 SDGs. So I see a tremendous upside, and I insist and I would actually encourage all the businesses, all the entrepreneurs, because this is going to help you also address your investors' checklist as well. I mean, are you taking sustainable action? And potentially, of course, make your product a lot more sticky too.
So that's really interesting. One of the things that I noticed, which you mentioned with some of our projects, we work primarily with smallholder farmers. 2/3 of the farms that we work with are women-owned or women-operated. And I know you have a special project that you're working with, connecting female entrepreneurs with payment systems and Mastercard and other buyers for that. How do you see that playing in, and what is the risk of not including, those types of groups that sometimes tend to be marginalized, especially within the financial services sector, for a long-term sustainable system?
Yeah, Ben, so you're totally right. I mean, SME is a backbone of any country's economy. So that itself is a critical component. And if you look at within that women SME, something that I'm actually very passionate about, and so is Mastercard. Just on the weekend, Thursday, Friday, Saturday, there was a Global Women's Summit, and we gave recognition awards to women SMEs from across the region. And there were so many interesting stories, personal journeys of some great women SMEs. And it still remains a disappointing fact. If you just look at Middle East, for example, 14% of the total SMEs are women, and less than 8% have access to credit. And this is globally the lowest, followed by South Asia. If I look at South Africa, one of our advanced countries in our region, almost 30% of the entrepreneurs are women. Yet again, less than 10% have access to credit, right? So you cannot ignore a segment which is the backbone of your economy, and within that, a large proportion is women, and they do not have access to basic financial services. So data is powerful, and by making them enter into financial services with very, very basic product like automating their supplier and buyer data, you augment it with telco data, you're able to find new creative ways to make them enter into financial credit services. A second part of a segment of the society which I think is left out, and there's a huge risk if they're not included, is the informal workforce. So globally, 65% of the employed people are actually part of the informal economy. The cost of handling the cash, keeping it, safety of this cash can cost anywhere between 1.5% to 2% of the GDP of a country. That's huge. So if we do not look into the women SME as an inclusion, it's a question of how economy would run without these women SME and SME in general having access to credit. Informal employee segment is another segment which you can't exclude. So I think they're just fundamental to any market's economy.
That's great. I think talking about the importance of SMEs for the economy as a whole is important, but obviously that makes up a large portion of many large financial institutions' customer base, right? And if it's not their direct customers, the customer of their customer, it doesn't drive without that engine. Obviously innovation is critical to developing sustainable systems and sustainable technology and sustainable metrics. Large institutions tend to approach that a little bit differently than like a startup, right? FinTech startups. So how are those two approaches complementary, and how do you see that working well together to create a better, resilient financial infrastructure? Alex, we'll go back to you again because of those 2 feet you've got.
Yeah, totally. Thanks for this question. I'll build on something Amnah just said and get back to your point. First, literally as we speak, a few kilometers away across the water in Kenya, we just launched Tawi, which is an agri-tech platform matching small farmers with commercial kitchens, meaning we provide aggregate consistent demand to small farmers, increase the quality of the food products, and financially include people who otherwise wouldn't be there. We make them financeable. And this is a great thing. Further away in India, Solve is an e-commerce platform where right now about 400, 500,000 SMEs do commerce, and we provide them with financial services, but also logistics and other business services. Here in the UAE, 2 homegrown fintechs we incubated are remarkably focused on financial inclusion, and that is APRO, which is a consumer finance onboarding app, as well as MyZoy, which is helping migrant workers send money back home in a way that is robust, compliant within the financial systems, and so forth. So back to your point, and you use the word genuine or authentic. I think one of the two, and it sounds like do you really mean it? You're a business, you're a big bank. And I get this on LinkedIn every now and then. Yeah, ultimately you're backed by Standard Chartered. You got to get some returns. And the point is, unapologetically, yes, we take VC type risks. We'll get VC type returns. We have to build commercially viable businesses. There's no compromise on this. It's non-negotiable. It's absolutely what we do. And yet this is not only consistent, but it goes together with the business models I've just described, which enable sustainability, financial inclusion. Because these are themes that are relevant to society. They're problems worth solving. And therefore, they'll result in viable businesses, which we build and incubate. So it's the answer to your question is exactly by doing this, by building viable businesses. We can enable the right things and do the right things by society, generally speaking, and that's very purposeful, and that's economically viable in the same time, as opposed to having to choose between one and the other.
That's a great answer. I think that when we talk about sustainability, everyone automatically thinks of the environmental sustainable part of that, but it really is, when we say sustainability, it's something that has to be self-sustaining, right? It has to continue to move on. I think Google obviously lives all over in lots of different places in that world, but Google affects startups, FinTech, large financial institutions. They use your products, you support those. How does Google see that working together between kind of the large financial institutions, the large corporates, and the startup world to drive compatible innovation for sustainability?
I think we approach it a number of different ways. I think looking at kind of the technologies that are key pillars of innovation across large financial institutions and fintechs, I think we clearly see cloud computing and the innovation that brings both to a large financial institution or a small fintech organization. In a lot of ways, it levels the playing field because it gives an organization who has a huge technology team with the same resources as a two-person fintech company. I think secondly, cybersecurity is only kind of growing in importance, and it's by no coincidence that the chief information security officers now often have a board seat, and we're seeing kind of the role of cyber threats and our ability to defend ourselves against that as an important component of building a resilient financial ecosystem. And then something that's probably the word that's been said the most today is artificial intelligence, so I won't go on too much about that, but I do think we see kind of a significant kind of opportunity in financial services with artificial intelligence, and we're starting to see those use cases kind of play out in the coming years. The other things that we're doing directly for climate is we have a number of tools that we make available to everybody. We've recently launched a climate tech accelerator to help bridge the gap between climate tech and FinTech companies and large technology companies.
That's great. Real quickly, Namir, since you do have so much exposure to a lot in the FinTech system, what's one key critical technology that you see driving sustainability in the financial industry over the next 10, 20 years?
I would say distribution is very important, and that's where payments comes into play. I think payments is going to really fast track the adoption and create more awareness and nudge the customers more towards their impact. And then, of course, link also link support to the projects as well via the ecosystems that companies are able to offer. And the second piece is going to be not technology, but a very important tool, education. FinTechs also need to be aware of the educational impact and how they need to be embedding this into their own business models and make revenue out of it. Don't do charity.
Okay. We'll close out because we're a little short on time because I know you guys have some important meetings to get to as well after this. But we'll go through and I'd like each of you to, in 30 seconds or less, give the audience one concrete action item that they can take to help drive sustainability in their organization or in the organizations that they support. And Adam, we'll go ahead and start with you and work our way down.
I think the figure that really stands out to me is the World Bank last year said there's still 1.4 billion people in the world who don't have access to financial services. I mentioned at the start, something that we really care about at Google is how can we build products for everybody. So I'd really kind of encourage the product managers and product leaders in the room to really think about kind of like how can we build financial services for everybody, not just the few.
There are 17 SDGs, read about them, that's really important, and then understand not just focusing on, let's say, climate action, focus on humanitarian support as well. 140 million displaced, 65% of the wildlife population has died. We need to focus on those denizens as well of this planet. So please do study and thoroughly read the 17 SDGs and build your business models on top of that.
So there's a famous quote, I'm forgetting by whom, if you change the way you look at things, the things you look at will change. So I think sustainability, it's great. All of us work in corporates or fintechs, and there's always a return on investment. I know you mentioned it. And just do it from your heart. I mean, leaving a more livable planet for kids of tomorrow itself is a great thing.
I think it's one thing to operate sustainably, as we said. It's another thing to have sustainability at the core of the business model. If you listen to people inside, entrepreneurs, their ideas, you'll build businesses adjacent to the main businesses that can be remarkably powerful and move the world in the right direction.
Well, wonderful. Well, thank you so much for joining the panel. Thank you for the insightful answers. And thank you for being the builders of a sustainable financial infrastructure. Any last words that anyone wants to say before we run out of time? No? All right. Well, thank you very much. I think you can see that we have a lot of work ahead of us in order to build a resilient and sustainable financial infrastructure in this age of disruption. So thank you, guys.
Thank you.
Thank you.
Thank you.